Hello and welcome everyone back to the main stage. I'm Liz Lumley and this is a great panel and we're looking at bringing a neobank to market. And this is a really interesting session because it brings together a myriad of players that have all played a part in this journey about improving banking for everyone. We've got LendingClub Bank, which was formerly Radius Bank, Treasury Prime, and the Neobank Challenger. So they're all going to sit down and have a bit of a discussion and walk us through this journey that they've all been through. Before I start with the panel and get everyone to introduce themselves, everyone watching here, if you have any comments or questions for the panel, please, on the right-hand side of your screen, go to the stage chat and type in any questions or comments you have, and I'm sure the speakers will be more than happy to interact with you. So great, so now we'll start in introducing our panel. As I mentioned before, we're really going to talk about this story and this journey of these three players and their banking journey here in the US. So as a way to kind of introduce themselves to you and also give some highlights and insights about their role in this story, I'm gonna go through the line and have them tell you who they are and their sort of their path and their place in this narrative. So I'm going to start off with Chris Tremont.
Hi everyone, my name's Chris Tremont. Work at LendingClub, formerly Radius Bank. Head up what we call the virtual bank. I've been with the company about 12 or 13 years, and from my perspective, was fortunate enough to join up with a CEO and a team early on as we were thinking about how do we acquire customers, consumers, small businesses in a way that was different from building physical branches. And so we set out on this path over a decade ago to provide excellent products, great technology and customer service, all through digital channels. And so that's been a little bit of our path from where we started 10, 12 years ago, have built it out over time, said to ourselves a few years ago that we were going to work with Fintech versus maybe some of the larger big tech companies. And that's how I got to meet my good friend Christine and some other folks along the way. And then Nate at Challenger, here we are today, fast forward a few years in the banking as a service game. So that's the very abbreviated version of sort of our journey to get here, and happy to be here and look forward to getting into it further.
Excellent. Thank you, Chris. So I'm going to pass it over to Nate from Challenger. Please introduce yourself to everyone.
Hello, everyone. I'm Nate, the CEO and co-founder of Challenger. Challenger is a neobank for employers to sponsor banking and savings for their employees. So we're trying to rethink the user acquisition and monetization of neobanking so that lower income Americans have access to greater financial services that are subsidized by their employers. So we believe that the primary driver of consumer behavior around people's finances is trust, or a lack of trust. And so we founded Challenger to bridge this trust gap for Americans who are underserved by incumbent financial institutions, but haven't actually built enough trust in the newer digital providers to switch. So hopefully this is a simple premise that we're working on. If your employer pays you or pays your bank fees for you, then there's probably not a catch. So we're working on employer-sponsored financial services for employees.
Excellent. Thank you, Nate, very much. And this panel is blessed with not one, but two Chris's. So I'm passing it over to Chris Dean now to introduce yourself.
Hi, thank you. I am Chris Dean. I'm one of the founders and I'm the CEO of Treasury Prime. Treasury Prime is a technology provider that connects people like Chris Tremont banks and to people like Nate at Challenger. Like, this is our role. We're the glue that holds us all together. There can be significant technical challenges, some interesting regulatory challenges to connect a bank and a fintech. And we exist to make that as seamless and as easy as possible, that connection.
Excellent. Thank you, Chris, very much. Okay, great. We're gonna start laying out this story for all of you. So I'm going to start my first question to Chris Tremont. What was your path to becoming a fintech bank?
Yeah, Liz, good question. And I sort of touched on it in the introduction. It had been a bit of a journey for us. And I'd say it started probably 6-7 years ago, where we started to see some of these more nimble fintech type companies coming on the scene. And we had the approach that probably more prevailing today than it was 6-7 years ago, but that banks and fintech could do more working together as friends than as foes. You know, that used to be the topic of many a panel at the time of fintech. You know, is it good or bad for banking? And we took the approach at Radius Bank back then that we were going to get to where we needed to go faster by working with fintech. And so we dabbled in it early in 2013, 14, 15, sponsoring a couple of bank programs, and really saw it as a way to boost acquisition efforts for the bank, as well as advance our technology. And I'd say where things really started to accelerate was probably 2016, 2017. We welcomed in some new private equity owners of the company, a new board, and they really got behind this vision of a true digital bank. And so with that, started to build out the team and put together what we called a 3 or 4 year product roadmap. It was the first time at the company we'd ever done it. And we started by putting the customer at the center, and we said, what does he or she or the company need? And we built around it. And one of the things that we did as a smaller community bank at the time was, bankers have a propensity to say, I need to start with my core banking system. It's antiquated. I need to fix it. We stepped back and said, we're going to leave the core as it is, and we're going to build around it to help drive better client experience and better results for the bank. So we were kind of like in startup mode. And Nate knows this, when you're a startup, it's about how do you acquire clients at the right levels? How do you maintain them at the right levels, grow deposits for us or loans? And so that's what we did. And so we set out to kind of build around our core system, and we sought out fintech companies that were more called B2B focused that could help us get there. Whether it be through account opening, account management, data management, KYC, all that. So that's what we put this roadmap together. And along the way, we were fortunate enough to answer a phone call from Christine about 3 years ago. It was had an idea for a company, and we said, we have a use case for you. And so our two teams hooked up together and got a platform live for small businesses for our own direct technology about the summer of 2018. And at that moment, or shortly after, Chris and I and our teams looked at each other and we said, you know, there's more to this than just maybe the one application we've built so far. And we have this nice cultural and strategic connection. And both companies have been talking to fintechs in and around the space. And we said to each other, let's build a banking as a service platform that can really help fintechs deliver on their goals and objectives. For Radius, it was about how do you acquire clients and deposits, mainly, you know, from a bank perspective. And that's what we sought out to do. And over time have brought in a couple of other new partners along the way to build that out. But it started to gain momentum over the last 2 or 3 years. It really started to hit its stride. I mean, even pre-pandemic, I mean, there were tailwinds pushing it. Now more and more folks digital, but it was really the last 2 years that we saw the strategy really come to light, both in our direct bank and our indirect banking as a service channel picking up too, and getting to meet great folks like Nate along the way and helping to power them. And so that was the abbreviated version of how we got here over a decade. And we were fortunate enough to put together a good team and a good program, and we knew it belonged in a larger infrastructure. So we're excited to be one of the first ever, true fintech marketplace banks when you brought Radius and LendingClub together to form LendingClub Bank as of last month, February 1st. So it's a new day for us as well.
Excellent. I think that was a great overview of that journey to becoming a fintech bank, and you perfectly queued up my next question because I want to speak to the person who made that phone call, Christine. What was your role in this partnership?
I certainly made the phone call. That was an important piece. So my journey, just very briefly, is that I was at Silicon Valley Bank. They had bought our previous company, and we saw that there was a real need for, on the fintech side, like people like Nate, to really connect with the bank. And so we created Treasury Prime to be that technology layer that can connect a fintech to a bank. And back then, like Chris said, it was like 3 years ago. I know we said to ourselves, there's like 5,000 banks. Surely we can find one that is a good partner, is customer focused like we are. And I think, yes, it was possible. I'll tell you, I made 48 phone calls before Chris answered them, before I found Chris. And it was not easy. I think the thing that we do that's so interesting is that we make it so it's easy for the bank and the fintech to talk to each other. It's this role is just super important and critical for most fintechs. The single most important partner they have is the bank, and being able to automate that relationship so that the business can keep running as a business, because both the bank is a business and Challenger is a business. These are businesses that have to make money, and what we do is automate that whole system so that everyone can just get on with the business of, Nate has, his employers and, employees, I guess, who need to use the app. And, Chris has to make sure that all the regulatory parts are handled correctly, that the deposits are good, that everything's safe, and operationally that just continues to shine. And they've both done a great job. And I'm happy that we can provide a small part of that.
Excellent. Thank you. And I'm going to go on to the third part of this story. I'm going to go on to Nate. I mean, I've seen you quoted as saying that Challenger jumped at the opportunity to work with Treasury Prime and LendingClub Bank. So I just want to ask you, Nate, why? Why did you jump at the opportunity?
Totally. So this is my second VC-backed fintech company, and ultimately, we know how important partnerships are. Fintechs can't do what we do alone, and it's best to work with companies or partners that really get it. So I'll share the four main priorities we had when looking for a bank and an infrastructure partner, and specifically, I think we wanted both of those. We wanted modern, robust technology, and this was really to help us accelerate our path to market. We didn't want to have to build everything. Two, we really wanted to work with great teams, and that means being encouraging and flexible. So our products are first of their kind, and we wanted to work with, especially a bank partner that wasn't afraid of that. Third, it was important to have a business relationship that really made sense on day one and at scale. And I think for a lot of BaaS vendors and bank partnerships, it's either one or the other. And lastly, we're looking for really great reputations in the industry, which Treasury Prime, Radius Bank, and LendingClub and Marqeta all really have. So we dug into lots of options on the market across the spectrum, from the lightweight banking as a service APIs, where we really had no interaction with the bank at all, to direct bank partnerships, where we would need to build those mission critical workflows ourselves. And ultimately, we went with Treasury Prime and LendingClub because they offered the best of both worlds with an API that helped us get to market, and that direct banking relationship that offers us flexibility and control on the product side in the long run.
Thank you. Yeah, I'm glad you mentioned Marqeta. I missed that out. In my question in that part of that relationship. I'm going to move back to Chris Tremont a bit. I mean, when Christine was speaking, he talked a little bit about how Treasury Prime was the glue, and they really sort of enable two parties, banks and fintechs, to speak to each other. So I really wanted to ask you, Chris Tremont, why did you choose to work with Treasury Prime as your API provider?
Yeah, it started from the very beginning, as a lot of these great relationships do, around having the right cultural and strategic connection between companies. And we felt that instantly with Chris and his co-founder, Jim, and the team they built out over time. But from the moment we took that phone call 3 years ago, we knew they got it, and we were just off to the races. And sort of their approach to, I think, serving the customer, serving the bank, and the experience they'd had in the past, as Chris alluded to, some of the stuff that they had done, we saw as the way of the future. So we were aligned there. And so it was like quickly after we got our first product to market, it just made total sense for us. Chris and team had kind of easily connected to our technology. We were both speaking the same language. We kind of wanted the same things too, in terms of how we were approaching the market, looking to grow, talking to the same type companies. And from our perspective, we really saw this API banking really as, like almost banking 3.0 or whatever it was in the future. And Chris and his group had started to build it. So, we got to talking to a lot of technology companies over that 2 or 3, 4 year period as we were building the roadmap. And Treasury Prime was the one that, got it the most with us. And it means something to be able to work together with a tech company to get a product to market and then to grow it, right? Versus just talking about, could you do it? We had actual proof that it could be done. And, that gives you real confidence in your partner in going forward. And so that was how we knew it was the right fit for the bank.
So I want to go back to Nate now. I mean, you spoke a lot about looking for, great partners and great names in the industry and companies with good reputations to work with. So I wanted to look a little bit about, once you find that bank and technology partner to work with, could you talk us through a little bit what the implementation process has been like for you?
Yeah, I honestly don't have that much to say. They've definitely exceeded our expectations. Treasury Prime has made it incredibly easy for both the core banking piece as well as the card issuing and processing. It's all in one API. Honestly, it's exceeded our expectations. It's helping us build faster and get to market. And another important thing that I will say that I think sets Treasury Prime and LendingClub Bank apart is that we have a direct banking relationship. And I think Christine says this all the time, that fintech still runs through banks. And so having a banker on speed dial is really important. And we think that that's a strategic advantage for Challenger in the long run. So it's been really great.
I think you made a really good point there. That if you have the less to say about the implementation process, that's the better. That means it was a good experience. I think a lot of people in this industry will understand what you're talking about. I'm going to move on to Chris Tremont back. I mean, I wanted to talk a little bit about the idea of like working with APIs and cloud and modern technology stacks has sort of evolved and become more at use in the financial services industry over the past decade. And it was for a long time considered a risk for a lot of banks and a lot of financial services firms. How much is API orientated, cloud based systems, how much in the North American market is this still considered a risk for some players?
It's a good question. Yeah, challenging one to answer, I think, but I can give you one banker's perspective, and I think that certainly there's risk in anything you choose to do, right? It's just how much risk you're willing to accept and what are the safeguards you're putting in place, and are you executing against a strategy and staying behind it? So, I look at this as, I firmly believe that, the way you described it, it's a bit of a mouthful, but like the API cloud-driven, data approach is sort of this, I said it earlier, like this 3.0 version of where we're headed. If we started with online banking, then it was mobile, and now we're on to this API layer that Chris and team are helping to really champion and push out there in the market. I see that as the way of the future. So certainly there are risks in terms of, from a banking perspective, maybe it's different types of human capital resources that you're putting on your team to help manage this, that understand the data a little bit differently. So resources a little bit, maybe financially speaking, how you're looking at it over the long run, it may be more cost effective. But I think like the risk really is, depending on the specific bank's goals, the risk is like not going this way, to be honest with you, in terms of like where things are going and how you stay ahead of it and can meet customers' needs, whether it's your own direct customer or serving clients like Nate and others that are growing in the fintech space that are kind of, the word disrupt is overused, but disrupting the traditional banking system, and we're finding ways to embed finance differently than just coming to the Radius Bank website to do so. I think consumers, small businesses, even larger companies want different ways to manage and move their money, and that's the kind of stuff that Challengers do and the kind of stuff that Treasury Prime is doing. So there's risks if you're not even evaluating it, right? So I don't know if I fully answered your question. I do think there's risk involved, but there's risk in everything, right? Like no risk, no reward, and so that's how we look at it.
I do. I think that question was a bit of a personal interest of mine. There seems to be. I want to find the date when cloud was considered a risk for banks, and then now, as you said, it's a risk not to examine cloud. And I want to find where that tipping point. I always like to gather people's opinions on where the sort of conventional wisdom is and where the winds are blowing. So thank you very much. So I'm moving on to Christine now. And again, you've mentioned this several times in this discussion about how Treasury Prime really sits between banks and fintech companies. What do both sides need to understand about each other, Christine?
It's a good question. I can tell you that date, by the way. I know that date. When Cap
Please
One
tell
said
me.
they were going to move to the AWS cloud, and that was like, oh, this is possible. And that was like right around when Chris was making his they made that long strategic plan. These dates coincide. I don't think that's a coincidence. From the smart, forward-looking banks saw what was happening and they moved forward. Yeah. Before I answer your question, I'll just add to the risk part. Everyone thinks the risk. They think about it a lot. They don't think about the upside. And it seems like of the many banks in the U.S., some are like firmly attached to their very good horse and buggy business, right? This is not a good long-term strategy, right? You need to be looking forward. And it's tempting to say things about LendingClub Bank, but really what they're doing is they're so good at it, right? They're so good at enforcing their governance model that it's not really all that risky for them just because they're so good at it. They've decided they're going to automate it. They've decided they're going to look at the data, and they've decided that they're going to run their business that way. And it's phenomenally good. And this is the thing that the sides don't understand about each other. To the fintech, it matters that the bank is good at this, because if they're not good at it, the bank's going to get in trouble, but they're going to take it out on the fintech, right? They're going to say, well, I guess I got to kick you out, or I got to raise your fees because you're too risky or something. So you really need someone so you need someone on the bank side who understands what they're getting into. You need a LendingClub Bank. And this is not necessarily true of Radius, but on the, LendingClub Bank, but for most banks, they need to understand that the pace of innovation that the fintechs want to do usually just dramatically exceeds the bank side. Like Nate wants to ship something every day. He wants to add, a zillion users every day. He wants to add new products. He wants to try experiments. He wants to do all that. Banks, at least traditionally, are more conservative players than that. They want to be very careful. They want to move. It's not exactly the case in LendingClub Bank, because they're very innovative themselves. But that's usually the thing they don't understand. Like the banks don't understand how innovative the fintech wants to be, and the fintechs don't understand like how important it is to find a good bank. It is indeed not a commodity, and I can't tell you how many people said it is a commodity over the years we've been working on this problem, and then they come back later, 6 months later, and said, "Yeah, sorry, can we start all over again because we need to restart."
Mm. I agree with you completely, especially about the speed. I think banks need to sort of understand the speed at which fintechs work at. But I think conversely, it's when a fintech sees that a bank is looking forward and working with emerging technologies, it makes them feel like more comfortable and
Right.
like, oh, you can be my partner. So I agree with you completely.
Yeah, these rules for bank don't exist in a vacuum. Like, they're built over years to
Yeah.
make sure that the consumer's safe, the business is safe. You have to follow all these rules. They're a good idea. Um, and if you don't, regulator somewhere is going to get mad at you for good reason.
Yeah, breaking the regulation rule is one you don't want to do very much. So I think we're coming close to the end of our discussion. So we've got one more question, and I'm gonna ask it of all of you. So we have kind of a final word in our discussion. This emergence of neobanks and challenger banks over the past decade has happened all around the world in different flavors. And I really wanted to get an idea of the North American flavor of the challenger bank, neobank market. So I wanted to know, how would you describe kind of the maturing of these players, especially compared to other regions? Asia is brought up so often. What's going on in Europe, in the UK? So yeah, so I wanted to have sort of your unbiased or biased view on this challenger bank market for North America. So Nate, I'm going to start with you so you can give your comments.
Sure. I think high level that we're moving past a product-oriented innovation cycle where a customer says, "Hey, I don't want to pay bank fees," and every fintech builds a no-fee bank. And I think that at this point, that's sort of a formula that has worked here in the U.S. market and to great success. But I think for this next wave of fintech innovators, they're going to have to focus more on other primary and secondary and tertiary problems, including trust. So how are you going to solve for a trust problem? And I think this probably, I don't know the world neobank market as well as I know this one. So I won't make as many comments, but I know that a lot of markets are much further ahead than we are in bundling. And you've seen Walmart just launch a really or posing themselves to launch a very exciting fintech embedded product into their super app. So I think we have a long ways to go. There's a lot that can still be done. There's a lot of blank space, but I don't think it's purely build the products that people or the features that people are asking for anymore. I think it's more nuanced than that.
I know it's interesting you mentioned Walmart. There's every company's a fintech company now, which is happening. So I'll move on to Chris Tremont now to get your view on the maturing of the challenger neobank market in North America.
Yeah, I would align with a lot of what Nate said, especially listening to his last commentary around probably have a long way to go. But we've come a long way over the last few years, certainly. And, if I took more of the banker's perspective here and the way we've kind of looked at it over time, I think it still remains to be seen how successful some of using that term neobanks can be. We've seen some early success and some really nice maybe valuations out there around, being able to acquire clients, but probably as Nate said, moving past your product focus and how do I do more to serve whatever the market you're serving's needs are that might be beyond just a no-fee checking account or a high-yield savings account or a cool trading app, and starting to, the rebundling. So not maybe the cross-sell component like bankers would talk about in the 80s or 90s or 2000s, but being able to provide a holistic set of services, I think is where you see the market going. From a bank perspective, we would always look maybe at some fintech, valuations out there and say this is really interesting what's going on. I think, the path to monetization is interesting when, it's hard sometimes when you don't own the deposits, you don't own the balance sheet, right? And hence why we talk to a company like LendingClub. You see others out there going after bank charters. There are some advantages to doing it, but we don't think that's the path for everybody. It is just an interesting one for maybe some of the larger, more mature companies that are into broader products. But I think like that is a trend probably that we're going to see more fintechs coming together with banks. That would have been a prediction I would have made here 2 years ago, and now it's coming true. So that's kind of fun. And the second one is, I think, what Nate and team are doing around finding problems to solve in some like targeted areas, right? That have some real advantage or ability to scale. And I think like whether it's what Challenger's doing or serving underserved markets like within the SMB space is an area we think is going to be really hot. So there'll be some interesting things I think to come where we saw a boom of, consumer focused, I'm going to offer a checking product to maybe some more nuanced niche market products, focusing maybe on other areas. And I think it's a fun time to be in sort of this convergence of fintech and banking space for sure.
No, it's very exciting. No, I agree with a lot of what you said. So we're gonna go to Christine to bring us home. I'm really excited to hear your views, especially given your experience from Silicon Valley Bank and the position Treasury Prime holds in the story and in the ecosystem. So Christine, how do you see the maturing of the neobank challenger bank market in North America?
Yeah, you have to be careful here. You get Chris Tremont and I started, and we'll be here for the next 2 or 3 hours. Yeah, so like I'll do it. I'll go all the way back. So like this is like started in like the early '90s with the interstate banking changes, right? It's that traditionally there's a ton of U.S. banks, way more than in other countries, and they serve their geography, right? They serve the people in their hometown, and you know, Chris is in Boston. They serve the folks in Boston. Did they serve the folks in San Francisco where I am? No, they didn't. But that all changed. It took a while for the banks to become mature. And what's happened is that the competition between banking services has moved from geographical based to more what I will usually call market based, right? You can find that market that you want to serve and make a solution that's just great for them. And fintechs are fantastic at this. Like they have insight into their clients that it's hard for just a bank to know because banks are just different beasts. It took a while for the banks, cultures to mature. There's still not a lot of great banks doing this. LendingClub is one of those. And it took a while for the technology to mature. Like when this started happening in the US, 5, 10 years ago, it took a big, huge lift to connect to a bank. And like the reason Treasury Prime exists is to just entirely remove that friction, to make it so that, if Nate wants to talk to Chris Tremont, that is easy, and they can just get started. And it's about the making sure all the regulations and the governance models in place. It's not about how do I get my balance, how do I send a wire, how do I send an ACH. That should all be easy. Hopefully Treasury Prime makes it so. And I think by removing this friction, you're going to see an explosion of different neobanks in the U.S. all serving these markets that you're not even thinking about now. I'm like, is that even a market? You wouldn't even have thought that, but turns out there's a lot of employers and employees who need a good relationship, right? There's a lot of them. I'd not even thought of this last year. When Nate has comes with ideas, says, oh yeah, that's genius if you can do that. That's great.
Excellent. That's perfect. Yeah, I know. I think that's one of the greatest things about fintech innovation, bringing those new ideas. So, gentlemen, this has been a really interesting discussion, and I think you really highlighted that story about bringing a neobank to market. I want to thank all of you, Christine, Chris Tremont, and Nate. Thank you so much for joining us today. And stay on the stage. We have plenty of great content for you at FinTech Talents North America. I'm Liz Lumley. Thanks again.